Coming in line, so I would not take much time here and would move on to our next session. It's an interview again, and we have Mr. Amit Bivalkar, MD and CEO, Sapient Wealth Advisor and Brokers Private Limited. Welcome, Mr. Amit, to today's forum of 9th Annual Wealth Management Convention Day 2. It is getting very interesting to have veterans from the industry like you. And Mr. Deepak Jain is here to interview, sir. Over to you, Deepak, sir.
Hi, Amit. Nice to be on the same platform discussing some things which most of our participants would like to hear about. And there's no better person than you telling us all about what you feel about these things which they want to know. So my first question is, and I'm playing a kind of a devil's advocate here. Why would I like you to be my financial advisor?
Okay. I thought you are going to ask easy questions, but good morning, everyone. On a Sunday, making up to 3,300 in the crowd really speaks a lot about AFM and its content. So, good morning, Deepak. More importantly, I'll flip the question and ask you that if I am a patient, will I go to a doctor who has conducted 10,000 surgeries, or would I go to a doctor who has conducted 10 surgeries? So typically when you go to a doctor, you look at the experience, the credentials, and the success ratio. Similarly, in our business, why do people come to a financial advisor, or why they choose a financial advisor, is because of the experience of the team within the financial advisor company, as well as what is the success ratio and the word of mouth, and from whom you have got a reference. So it's more to do with whether you have clients' interest first in mind, whether you have integrity in mind, whether you have the experience wherein you have seen more cycles than the client, and you can navigate the client through these cycles by handholding him in a crisis situation. I think that is more important, Deepak. So it is nothing about returns and how much advisors alpha we have created. It is more important that whether I am on track to reach my goal, rather than becoming a fund manager. I think the client is looking at an investment or a wealth manager and not a fund manager when he is choosing a financial advisor.
Great answer. Great. My next question is, as a financial advisor, you need to maintain client relationship and client loyalty. So how do you ensure that?
Two things. One is that when you go into Matunga in Mumbai, and in a South Indian cafe, there is a board which is written which says that the owner of the hotel eats here. It gives tremendous comfort to the patrons that if the owner is also eating the same food as they are serving me, then this will be in refined oil or whatever and made with good cooks and high quality raw materials. Similarly, in a financial advisory business, if I buy those products, those schemes, those funds, which are either bought by me or my colleagues in the company, or which are bought by my family, and if I can demonstrate that to my clients, I think that is the biggest comfort what a client gets. So the loyalty of a client is dependent on excellent service, because advice is a hygiene factor. You have to be good at advice. So I will not talk about advice. What is more important is post-sales service. I mean, today, if I want to take a example, and purely as an example, why do people not buy a Skoda car today compared to a Maruti? Because Maruti has more service stations than Skoda. So if your service is good, I think people give value to that. So your service after sales has to be good. Your advice is a given. Third is, are you available to the clients when they need it? So whenever there is a query, you should be available for the client. That is point number 3. And point number 4, as I said, that if we can demonstrate that I am going to sell you a product or a scheme which is either bought by me or my family members or my colleagues at the office. I think these are 4 things which are of paramount importance, Deepak.
Great answer, sir. This is also another question that devil's advocate comes here. And the question is, have you ever advised a client on something which turned out to be wrong? right? The advice didn't work out and the client lost something. So how do you deal with such a situation and move on?
So I will say that it is not that we have advised and it has become wrong once. It keeps on happening
Right.
because we don't really know the market and the market is supreme.
Right.
What I have been learning over the last 23 years in the career is that if you get 60% of your calls right, the client's goal is achieved. You don't really have anything in your control. Corona was not in your control. International flights getting banned, not in your control. Crude oil flaring up, not in your control. One golden sentence which I have learned is control the controllables. We try to control the uncontrollable thing by saying, okay, sir, 17,800 पे बेच दो, 15,800 पे खरीदेंगे. That is not what we are supposed to do. So what is more critical here is that if 60% of your advice goes through, then I think the client goals are achieved. Yeah, of course, I am saying that you don't need to sell all and sundry which is available in the market. You need to have a defined research process. You need to have a filter mechanism. You need to have a list of what not to do in your business. And after adhering to that, even if you make a mistake, clients are okay if you go and accept your mistake upfront rather than client coming and asking you why did this happen. For example, 2 years ago you had a asset management company which wound down their schemes. Now this was outside the control of anyone, but if you had suggested and if you had money into those schemes, I would say it was a wrong decision then in the eyes of the client. But if you go and upfront accept and tell them what is the actual thing which has happened, I think clients do really appreciate it, Deepak.
Right. So, right. One more question, which is with the practice management part of it. How do you ensure and protect a client's information and maintain confidentiality? What is the process which you follow so that the information is the privacy of the information?
So there are 3 layers what we go through. In Sapient, what we have, Deepak, is we have the admin module, then we have the relationship manager module, and then we have the service relationship manager module. So between the 3 of them, only these 3 can have access to the client's information. Admin only at a level where you need to reset a password or something like that. But on the RM and service relationship manager level, it is more to do with that he will have access only to the client's information, and others within the company are not having any access to the client's information. It's all cloud based and it's all stored in a separate layered structure.
Right. Another question, sir, attached with this is, what is your model of acquiring new clients and what is your model of servicing existing clients?
Model of acquiring new clients, I think it is more to do with referencing through the existing clients. You have client segments within the company wherein you have a corporate structure, you have a high net worth individual structure, and you have the retail structure. Corporate structure, Deepak, is where you go out and you find out new clients and try to meet them. The high net worth is a strictly reference only model because it is more important that you get the client which you want to handle. Most of the time there is expectation mismanagement in terms of client's expectation versus what you will deliver. And you don't want to give the client a bad experience after 1 year, 2 years staying with the firm. So when a client refers another client, the first client exactly knows what is the model of Sapient and your company and the service standard. And he will refer only those friends of his who are used to such kind of service. That is the first. The second one, you are saying, how do we service the existing clients? So as I said, we have a relationship manager, we have a service relationship manager under him, and we have the back office and operations team under them. So any transaction related stuff gets handled by the service relationship manager, and any investment related decision or from where to redeem is discussed with the relationship manager, and over that we have a branch head or a center head, and over that there is a layer of management. So the client can access all the four layers, but with transactions he talks to the service relationship manager. For the advice he talks to the relationship manager, and on a escalation matrix he can come up the hierarchy whenever he wants.
So, sir, is this multiple point of touch with the client not a problem in dealing with clients? Because you have different layers of people who are interacting. So some people would here argue, why not have a single point of contact and he does everything? So what benefits do you see in this kind of structure?
Right. So what is more critical here to understand is that you are diversifying your risk if there are two RMs attached to a client. So that if somebody is not well, somebody is not there, or if somebody leaves the organization, you already have a backup plan created for your organization. That is point number one. And point number two is that with technology, you can actually automate all the transactions, but still it is very easy to book a flight ticket on Make My Trip, but very difficult to cancel one and get a refund, right? So when you are stuck, you need somebody to talk to, you need a face to the name, and that's where the service relationship manager actually comes into play. So if the client gets stuck on a transaction, he can call the SRM, while all the investment decisions, he can talk to the relationship managers.
Right, so right. So my last question is what advice would you give to people who are wanting to enter into this space?
As in, who want to become financial?
Yeah.
Who want to become financial advisors?
Yeah.
More important is that you should have the empathy with you for the client. That is a prerequisite. I will say two things. You have to actually look at liya pehle hai ki diya pehle hai. That is the philosophy what we follow. And liya jada hai ki diya jada hai. So whatever advice you are giving, whatever fees clients are paying, are you actually giving more value than the fee that the client is paying? So that is point number one. Second, do not look at last 2 years income and get into this fraternity. It is a long-term game. It is a 5, 10, 15 year process that you establish yourself. So if you are coming for commissions, this is not the place to be. If you are coming for maintaining a relationship with the client and his family for generations to come, then definitely this is a very good field, because you are making clients realize their dreams over the next 10, 15, 20 years.
So what are the monetary and non-monetary benefits of somebody trying to enter this space? And if you could motivate them space to enter, and this is what you get satisfaction in terms of money and in terms of the other things which you achievement you.
So money is very relative, Deepak. What is more critical is you should have low expectations, whether it is returns or whether it is income. Do not compare yourself with somebody else, a colleague, a former colleague, or somebody like that. Non-monetary benefits are huge because you build a huge network of people from various sectors. So today we have clients where they are from the film industry, they are from manufacturing, they are from chartered accountancy, from legal, from doctor fraternity, and all of that. So whenever you need help, you have all this paraphernalia which is actually beneficial to the entire organization. We have seen that during COVID, that we got a lot of help from our clients for many of our employees and their family members. So networking effect is very robust and solid. That's a very big benefit. And the network effect actually, Deepak, brings in the net worth effect. So the network will bring you your monetary gains automatically over the next 5, 10, 15 years.
Great, sir. Great. Can we have some audience questions, please?
Sure, sir. Thank you so much for sharing a lot of thing about advisory space, what advisors want to know. We're talking about the business of empathy. So people are asking how to track client investments when they are not distributed by us. Take up this question, Amit sir.
Yeah. So basically we are talking of, I call it away assets. One is home assets and one is away assets. So home assets are what comes under your code. Away assets tracking is very easy. Many of the softwares what you have in the market, they allow you to upload the cash statements, and from the cash statements you can actually monitor the portfolio of clients who are managed by somebody else. Or else you have a Excel upload function in most of the softwares where you can export the cash, upload it through Excel, and that keeps on tracking your investment growth.
Okay. Thank you so much. The next question is, sir, is it a little different, but then I would like to, if you can answer, please. With low returns in debt market, is it still an investment one should consider for safety of capital?
Yeah, so when you say safety of capital, return should not matter. Because when you say return on capital, then safety should not matter. So when you're putting money in debt, just ensure that you are one step forward in your NAV than yesterday. And for that, even if you have to put money in a liquid overnight or a ultra short-term fund, the utility of that money is not for 10, 15, 20 years, but maybe 3 months, 6 months, 1 year, and 3 years. So apart from that, apart from safety of capital, I don't think so that people have gone ahead and put money in credit funds and gilt funds and duration funds. I think understanding debt is more complicated than equity, but we feel that it's the reverse. We'll spend more time on equity and less time on debt. So if your expectation is 3, 4, 5% today, I think sit in a 1-year maturity fund and hold on for 3 years, and you will be able to get that 4, 5% return from that fund. So debt is not where you should do any acrobatics. Debt is where you need to focus on preservation of capital and giving a linear, steady return.
Thank you so much, sir. So the key is stay invested. People are asking how to convince customer to purchase regular plan of mutual fund.
Compared to a direct plan?
Yes.
So as I said that the service value and the advice value, if we can demonstrate what is the advisor alpha, are you available when the client actually needs you, and is there a proactive communication from your end? If you have all these 3 things in place, returns are not what you should project. You should actually project these invisibles, and if you can demonstrate that to your clients, I think doing regular plans is as easy as doing a direct plan.
So when we're talking about uncertainty and times like we are witnessing for long now, one question, little odd, but I would still like to take it up, sir. So as an IFA, one question which is raised by his investor to him is, what happens in case IFA is no more?
Right. So succession planning, not only in case of clients, but in case of financial advisors is also important. And that is the whole idea why we started a company called Symphonia, where we are trying to address this issue. You might have your own friend in your city whom you have been talking about your business, and he knows most of it. I think you need to talk in more detail about he helping you out in case of any eventuality. There will be larger IFAs, well-established practitioners in your city or in your state. I think you need to go and take direction and guidance from those guys. Those will be able to probably guide you well on this subject. But therefore, you have more and more corporates or institutionalized businesses across the globe, wherein the individual entity is not projected, but it's the institution which is projected to the client. And therefore, people are going in for corporate entities.
Amit sir, last question of the day, though we have many questions, but I would like to keep it short and end it here. So one question is, when advisors are growing and when the number of clients increase, how they can maintain that personal relationship with even the clients which are small and which they inquired initially. How they can't be one-to-one with each of their clients. How to do that? People need your expert advice on this.
I think if you have traveled on any of the highways, you have Kamath Idli, which is famous, right? And all Kamaths have the same taste. All Starbucks have the same taste. All baristas have the same taste. Typically, personally, if you ask me, we cannot handle more than 100 clients if you want to have a personal rapport with the client. So every 100, you should add a relationship manager. And you should hire somebody who is actually smarter than you and younger than you. That's how you can actually take forward that relationship. If you have a process for onboarding, for recommendation, for research, for execution, I think clients would not mind even if number 3, number X, number Y, Mr. C, anybody handles your relationship, because it comes through a process. So you exactly know what is going to be delivered to you in terms of advice. Just one last thing, if you open any iPhone, new iPhone box, they pay so much attention to detail that when you open an iPhone box, the time taken for the lid and the box to actually segregate from each other is exactly 8 seconds. And you open any iPhone box across the world, it will take only 8 seconds, neither 7, neither 9. That's the kind of precision what they are maintaining even for the packaging. Ours is a advice business. So if you institutionalize that and if you standardize it, I think it's not a scare that even if you have 200 RMs, the advice will be common across the board.
Thank you so much, Amit sir, for taking this question so nicely and answering it with a lot of right examples. Thank you so much. And I think that also talks about the growth of relationship manager and how this industry still needs a lot of skilled manpower. We are talking about skilling all the time. So we still need a lot of people as compared to the industry growth. I hope you agree with it, sir.
Yeah, definitely. One key message is maintain low expectations on the brokerage, on the value of fees, and on the returns, all three.
Thank you so much, Amit sir.
Yeah. Thank you, Deepak. Thank you very much. Thank you.
It was a pleasure talking to you, and I hope everybody has learned so much with this 20-25 minutes of talk which we had. Thanks a lot very much.
Thank you.
Thank you so much. It was such an engrossing interview. Thank you so much.
Thank you.
Reach out today and let's do it professionally.